Have you ever stared at a trading chart and felt like you were just, I don't know, trying to read the Matrix? It's so easy to look at those screens, see this chaotic mess of zigzagging lines, and wonder if you need a PhD in advanced mathematics just to make sense of it all. But what if I told you those aren't just intimidating random data points? Welcome to This Explainer. What you're actually looking at here is a live, real-time progress report of an incredibly intense, ongoing battlefield. And today, we're going to translate all that chaos into a super simple, highly readable story. So here is our quick roadmap for today. First, we'll map out the market battlefield. Then we'll meet the combatants. After that, we'll dive into finding supply and demand zones. And finally, we'll wrap up with reversal confirmation. Let's get right into section 1, the market battlefield. Look, at its core, the market is just a constant, never-ending tug of war between two very distinct factions. On one side, you've got the buyers, they represent demand. On the flip side, you have the sellers, representing supply. It is literally classic economics playing out live right in front of you. When buyers demand more, boom, prices shoot up. When sellers flood the market with supply, prices drop. So if you think about it, every single candlestick on your chart is really just a snapshot. It's showing us exactly who is winning that tug of war at that exact moment in time. Now take a close look at the wicks. You know, those thin little lines poking out of the top and bottom of the candle bodies. In plain English, a wick is basically a visual record of a failed attack. It's absolute, undeniable proof of where one side aggressively pushed the price, tried to claim some ground but then completely failed to hold it, and got brutally rejected by the opposing side. Moving right along to part 2, let's meet the combatants. First up, let's meet the heavy hitter, the strength candle. This character features a large, thick body with very small or sometimes literally zero wicks. I mean, think about what a perfectly flat top or bottom actually means in this context. It means there was absolutely zero resistance from the opposing side. None. It indicates pure, uninterrupted control. And remember, size matters immensely here. A massive body proves there's a really strong, aggressive influx of institutional money taking total control of the market. Which brings us to a crucial point. Wrapped up in this golden rule, always move with the strength and never trade against it. Seriously, if you see a massive influx of buyers printing a giant green strength candle, stepping in front of that is a really quick way to get run over. Let the strength guide your direction. Don't try to be a hero and fight the momentum. But naturally, no one stays in control forever, right? Enter our second character, the indecision candle, or as you probably know it, a doji. Notice the visual cues here. We have relatively equal wicks on both sides and a tiny little body right in the middle. This signifies a pure stalemate. The buying attempts and the selling attempts have basically just cancelled each other out completely. The market is taking a breath. It's trying to figure out what to do next. When you see this, honestly, the smartest move is to just sit on your hands. Neither side has control, so you shouldn't be placing bets. Just wait for a clear victor to emerge. Alright, part 3, finding supply and demand zones. This is where things get really interesting. Now, this is an absolutely fascinating playbook for spotting institutional demand. Massive financial institutions leave massive footprints, right? They simply cannot hide their money when they move it in bulk. So how do we find those footprints? Well, first we locate areas of massive historical buying or selling on the chart. But here is the secret sauce. We are hunting specifically for an indecision candle, that quiet stalemate we literally just talked about, that is immediately followed by massive strength candles. Think about the story that tells us. The market paused, nobody was in control, and then boom, an overwhelming amount of money poured in, driving the price violently in one direction. That specific cluster, the pause then explode, marks exactly where significant institutional money entered the market. And it's exactly the zone we want to highlight and watch like a hawk when the price eventually returns there. But keep in mind, context is absolutely everything. You always have to compare multi-candle momentum. This is vital. For example, let's say buyers push the market up in just 2 hours, leaving these massive, fast strength candles. But then, the downward pullback takes 3 whole days of choppy, slow, indecision candles just to cover that exact same ground. What does that tell you? Well, it shows the buyers are moving exceptionally fast, while the sellers are weak, tired, and honestly just struggling. The buyers clearly dominate the broader picture here. Time and speed are just as important as the actual shapes of the candles themselves. Finally, Part 4, Reversal Confirmation. Let's talk about how to actually validate the trade. This brings us to our final character, the Control Shift Candle, which you might know as a pin bar. This candle features a massive wick on one side and a much smaller body on the other. It illustrates a violent, real-time counterattack. Let's say sellers are aggressively pushing the price down right into our demand zone, looking like they have total, undeniable control of the situation. But suddenly, buyers step in and violently reverse it, pushing the price all the way back up to where the candle opened. That massive wick left behind, that represents a total trap. It is the crushed attack of the sellers. And it's your very first visual clue that a major takeover is happening right inside our zone. Now, I cannot stress the specific concept enough. The body color absolutely does not matter. Seriously, whether that tiny body closes red or green, blue or gray, it is totally irrelevant. The massive towering wick tells the entire story. It is the actual tactical signal that one side just lost their grip on the battlefield. So please, don't obsess over the color. Obsess over the rejection. Okay? Let's put all of this together into a precise 3-step chronological playbook for confirming the reversal. Step 1. The trend slows down as it enters our zone. We start seeing those indecision candles, the momentum is clearly fading. Step 2. The counterattack. We look for our control shift candle, that pin bar with the massive wick aggressively rejecting the zone. But Step 3 is the absolute key to keeping you safe and keeping your money in your pocket. Takeover confirmed. We absolutely must wait for undeniable strength candles to completely take over and push the price in the new direction before we validate the trade. Never ever jump the gun at the first sign of a wick. Always wait for the new strength to definitively prove who has claimed control. Which leaves us with this final thought. The next time you open a chart, I want you to stop blindly memorizing textbook patterns. Instead, I want you to look closely at the wicks, look at the size of the bodies, look at the speed of the moves, and just ask yourself, who is really winning the battle right now? Because if you can answer that simple question, you'll stop guessing and you'll start reading the true psychological story of the market. But it begs the question, once you know exactly who is winning the battle, do you actually have the discipline to wait for the perfect moment to strike? Thanks for joining me on this explainer, and we'll catch you next time.